Dollar Swiss daily forecast March 9th, FXEmpire.com. Dollar Swiss pair fell hard on Thursday. As you can see, we came straight back down from basically the 38 to the 50 from the March north that we've seen over the last couple months. And the pullback is a continuation of this rather bearish action that we've seen since we hit roughly the 95.5 level. However, the recent bounce from 61.8 Fibonacci level, and we could go ahead and say the 90 neighborhood, does suggest that there is real support in this area, and it's not until you get below there that you can consider this more than an overall pullback. The Swiss National Bank is working against the value of the franc and has set a minimum acceptable exchange rate at 120 against the euro, which it is currently hovering just above. Intervention in that pair would make this pair rise as well, and as such, we don't sell it. We do look for buying opportunities because there are a couple different reasons, really, beyond the intervention, one of which is the U.S. economy is stronger than the European one. And speaking of the European economy, quite frankly, the Swiss send 80% of their exports into that area. So with that being said, and the Europeans in so much financial trouble and going into a recession in several of those countries, it's hard to believe that the Swiss economy will continue to grow. With all this being said, we still have a thesis of strength in this pair, and we think 95 will be tested and then eventually parity. Of course, if we break to new lows, we have to pay attention to what's going on in the Euro Swiss, and if it gets close to 120, at that point we might be willing to buy. Very odd pair to trade right now, as the dollar is the safety trade and the franc is the risk-on trade, which is completely counterintuitive to people who have traded the euro or the dollar Swiss for more than the last couple of years. But having said that, we do look for supportive signs. We think we'll fall, and 90 should give us a good opportunity to buy if we get that low. Watching the non-farm payroll report will be crucial in this pair, and we think that perhaps more clarity will be shown after that.